Hey everybody, I'm Bobbie Camacho, your Las Vegas and Henderson real estate agent. If you want to know more about Las Vegas and Henderson, this is the channel to watch. Go ahead and hit the subscribe button down below to get more videos, and it motivates us to do more videos as well. Today we're going to be talking about equity line and a HELOC loan. If you guys don't know what HELOC loans, I brought Shelly Panzarella from Prosperity Lending to talk about that. Hi, Shelly.
Hi, Bobbie. How are you?
I'm good. How are you?
I'm doing great. Thank you.
Good. So can you touch on those for us?
I can, yes. So the difference between a home equity line of credit versus maybe a cash out refinance. So I always tell my clients, it really depends on what their purpose is. We've actually been able to utilize a cash out refinance to help our clients pull out cash, right? Equity from their home. The home equity line of credit does the exact same thing. The main difference between the two is a cash out refinance is going to be a fixed rate mortgage based on today's market rate. The home equity line of credit is like a revolving credit card. So it is based off of a variable rate that could change month to month. Where I've seen it to be an advantage to use a home equity line of credit versus a cash out refinance today is when you have a client who has a much lower interest rate. So say they bought or they refinanced back in 2021, and maybe their rates are below the 4% mark. And today our going rates are in the 7% mark. To pull cash out and get a higher interest rate, it may actually make their mortgage payment higher. However, I have seen on a home equity line of credit, they can keep the original first loan, right, with a lower interest rate. They can tack on this second, even though it's a variable rate, but they will utilize that home equity line of credit like a revolving credit card. They can still consolidate debts. It's usually a little bit lower in interest rates than their credit card interest rates. But the objective would be to pay down that home equity line of credit as quickly as possible, still maintaining that original lower interest rate that they have. I have also used a cash out refinance though to consolidate debt. And believe it or not, even though the rate may be 7% and they're refinancing out of say that 3% or 4% interest rate today, the overall total payment, so if they're paying off credit card debts, their overall total payments are actually lower. So we actually ended up saving a client almost $1,500 a month in total savings, even though she stepped into a 7% interest rate to do a cash out refinance. Either one with today's equity position is great. The number one thing I would say to do is to reach out to you or myself, and we can kind of walk through the different scenarios for them.
Perfect. That's great information, Shelly. So if you guys want to know more about that, like she said, reach out to us. I'll have my information right over here, and we'll be happy to answer any questions that you have for that. And anything else, if you want to know about loans or housing, just reach out to us. You can call us, text us, email us, however you want to get a hold of us. We're here to help you in any way possible. And with that said, you guys make it a great day. Bye.
Bye.